Welcome one, welcome all. Thank you very much for carving out a portion of your day to attend this Trade the Fed Decision live event. As always, made possible by FX Street. Thanks to everyone in FX Street for making this event possible. Thanks for inviting me to facilitate this event. Let me first of all remind everyone here that the purpose of this event is education. I'm not going to provide specific trade alerts or recommendations, but we will discuss a combination of some of the things that members of the Federal Open Market Committee might discuss at today's meeting, and what we might see in terms of a decision due out in a little less than 15 minutes. We'll discuss some scenarios in terms of near-term price action, in terms of longer-term price action. Actually, I say longer-term price action. Longer-term for some of you may be like the next day or the next, couple days. But we'll discuss some scenarios for price action, how you might approach this. I will say this first and foremost right now. Let's say, for example, one of you entered a trade on a major currency pair like the Euro-USD, or more broadly speaking, on a U.S. dollar-based pair. Maybe it's maybe you're in a dollar-yen trade right now, but let's just use the Euro-USD for purpose of illustration here. And you can see on this 15-minute chart that I just expanded for the Euro-USD. The Euro's been a mess today. That shouldn't, by the way, that in and of itself should not come as a surprise to most of you. Did we have some news earlier today? But it wasn't much anything to give much attention to. The focus for the market today, arguably the focus for the market this week, has been this so-called Fed decision. What's the U.S. Central Bank, namely the Federal Reserve, going to do? Or maybe they're not going to do anything, but what hints, if any, might they show in either their statement or their economic projections, and how then might the market react? I say market, I'm referring to the currency market, but obviously, several markets could react, and then actually the currency market could act in tandem with other markets and their reactions, like the bond market. What will treasuries do? What will U.S. stocks do, for example? I digress a little bit. Back here on this chart for the Euro-USD. Let's say you entered a trade during either today's New York morning session or maybe during yesterday's New York morning session or even London session, and you're still holding on to a euro trade. Now, depending on how much profit you're sitting on, if you are still in a profitable trade, obviously you probably went long if you're in a profitable trade right now. Although I guess it's possible someone may have shorted around 135, in which case around 134. In which case, depending on your entry, you might have been in modest profit. But let's say you're in a euro long from earlier today or even yesterday. This event can certainly shake up the market to the degree where you can go from a moderate profit to at least a moderate loss, if not a sizable loss, depending on how much you're leveraged. So you do embrace a degree of risk, perhaps some danger, especially if you're over-leveraged, by holding on to a trade into this event. Now, going to zoom out a little bit, now we'll discuss some scenarios. I'll zoom in out a little bit on this daily chart. If you're in, several days ago, for example, I certainly can't make you any guarantees. Surprises are possible, but odds are if you're in somewhere closer to 132, perhaps holding a trade for several days, that would be a long trade on the Euro-USD, you're probably fine to hold on to it if you're treating this, assume you should, or assume you are, treating this as a longer-term position type trade. And, of course, what you're hoping for, if you're so long on the Euro-USD, as an example here, you're hoping the Fed will show no meaningful hints towards a so-called tapering of their bond buying program anytime soon. And I'll discuss what that means in a moment. I wanted to check the chat to see if there's any questions or comments. All right. So what are we, and maybe more generally speaking, what is the market going to be evaluating and considering in, 10 minutes from now? Well, first of all, the market's going to be contemplating this statement. This is what's coming up in 10 minutes. It's described, and I describe it this way as well. It's described as a rate decision, but as many of you know, it's the Fed's benchmark interest rate, the Fed funds rate. It's very, very, very unlikely it's going to be changed. It's currently targeted at a range between 0 and 0.25%. It was set in that range in late 2008. Extremely unlikely for that to be changed. If that's changed in any way, you're going to see the markets go wild. In fact, if it is changed, it's probably going to be bumped up a bit. In which case, some significant dollar strength. But extremely unlikely we're going to see something like that. Based on recent speeches by key Fed officials such as Chairman Ben Bernanke, what we're most likely to see happen first in terms of a significant policy move would be a so-called tapering or scaling back of their ongoing bond buying program, which is, as many have dubbed, quantitative easing or QE. So again, if many speculate, and I think rightfully so, the Fed's next move, if there's going to be a next move, then there's a lot of questions about the timing of the move. Could it be today? It's possible. Could it be at the next meeting? It's possible. Could it be by the end not until the end of the year? That's possible as well. Again, hopefully we're going to, if we don't get a policy move today, maybe we'll get some clues from the statement or from the Fed's economic projections, which could lead the market to speculate when the Fed's next move is going to be, and maybe even what the nature of the move would be like. But so the point I wanted to make there was Fed funds rate, the so-called rate decision. That's what we call this event, due to be announced in about 8 minutes. But it's really not about the benchmark rate per se. It's not about the Fed funds right now. It's really about the Fed's bond buying program. Again, that quantitative easing or QE. The big question right now amongst market participants, not just in the currency markets but in other major markets, is when does the Fed decide to, taper is the common word being used right now, being bandied around. When does the Fed taper back? When does the Fed scale back on its bond buying program? When does the Fed decide? And perhaps it's today. There's been some the minutes of the April 30th, May 1st meeting show that there's plenty of participants that are ready to scale back bond purchases soon, maybe as soon as this meeting. But the point I want to make here in a moment, and I'll show you some graphics to illustrate that, is that we have a very divided U.S. central bank right now. If you look at the various voting members of the Federal Reserve and what they'd like to do or not like to do, it's very divided around, very polarized, very polarized. And let me see if I can track down a graphic to. Well, you know what? Rather than a graphic, perhaps some text is in store here. Ooh. I just realized the text I wanted to copy and paste here I don't have available to me. What I can point you to, I can give you a little verbal overview, but what I can't point you to is the source on what I'm about to discuss. And that first source that I alluded to just a moment ago is the minutes from the last FOMC meeting. I may copy and paste the link to that in this room. Hello, Mario. And there it is. So if you if you want to play along at home, here's what you can do, and maybe do this later, not do it now. But if you go to at some point, maybe it's later, that link, open that file. You can download the PDF if you want to. If you go to page 7 of that document, the paragraph in the bottom left-hand corner of page 7 of that document provides what I consider to be the essence of the meeting minutes. Essentially what you find out in that paragraph in the lower left-hand portion of page 7 of that document, what you find out is that, there are several participants, several voting members of the FOMC that want to, or that are seeking to, taper back the bond buying program. But you also see, as you read through that paragraph, again, quite the split in the opinions of what the Fed members want to do. I'm reading from that document, from the minutes. One participant preferred to begin decreasing the rate of purchases immediately, while another participant preferred to add more monetary accommodation at the current meeting and mentioned at the committee. And I'm going back up to the next paragraph. I think he goes on to say, or they go on to say, the committee had several other tools. So just in that one sentence I just read, you have one extreme member that wants to stop, scale back purchases or stop purchases now. Another member wants to actually increase monetary, so-called accommodation. In other words, to bump up or boost purchases of things like Treasury securities and mortgage-backed securities, which is the essence of their bond buying program right now. So what does this mean to all this mean in the dollar? Well, the natural, I should say the very common response has been, and you can see this in the euro chart, and even on the charts involving the other USD pairs. Well, I'll show here the euro. This weakness in the dollar, which is to some degree helped to push the euro up in recent days and weeks. It is no coincidence that started around the time that the Federal Reserve Chairman Ben Bernanke delivered his last major speech. I may be off by a day or so, but it was like around May 22nd. So if you see my cursor right around here, let me start this presentation assistant so you see a marker. And we're getting close to decision time here. So Bernanke's speech was somewhere in here. And ever since then, the dollar's been notably weak. And it's not just against the euro. If you look at a dollar-yen chart, which I'm showing now, daily chart for the dollar-yen, perhaps not a coincidence that the dollar-yen's, that the dollar's recent retreat against the Japanese yen started about the time Bernanke made that speech back in late May. So we're about, 3 minutes away or so from the decision. Again, what we're going to see, if you're watching something televised like Bloomberg TV or CNBC, you'll hear some coverage there. Maybe some of you have a news feeder, such as Trade the News or even Talking Forex. They'll provide some updates as well. I'm sure there's other places you can go, FX Street, obviously, to get updates on what's being covered. I'll describe verbally what I'm hearing from some of the sources that I track. So again, what we're going to get is a rate decision per se, which should be no change. If there does happen to be a change in their bond buying program, boosted their bond purchases or a tapering back or decrease in their monthly bond purchases, we will learn that from the statement, which again is going to be made available in about 2 minutes from now. Now, if there are no changes in either one, either the Fed funds rate or the statement or the bond buying program, then the market's going to look to the Fed's economic projections. I won't have time to cover that, but as we're getting so close to the decision, I'm not going to have much time to give you a look at that. I can show you one quick thing. I'll show you one quick thing. What the market's going to be interested in, and here's the table that was shown, or that was published by the Fed in March. This is the last time the Federal Reserve, the FOMC specifically, calculated economic projections where they think the U.S. economy is going to go. Last time they did this was in March. So each quarter, the Fed provides new economic projections on where they think the U.S. economy is going to go. We're going to get a fresh new batch of economic projections here momentarily. So what the market's going to want to see is, for example, does the Fed think the U.S. economy is going to grow between about 3 and 3.5%, or is that a projection going to be revised for 2014? Better, worse? So we'll see. If it's revised better, if FOMC thinks that the U.S. economy is going to grow stronger than 3.5% on an annualized basis, then we could see some dollar strength as market participants believe that the Fed will taper back sooner than previously thought. Let me get these charts back to 15-minute charts, and we'll wait for the decision. Which it's 2 p.m., so we probably have a decision by now. I've got volume going here on CNBC. I've been going with Bloomberg lately, but I've got CNBC on today. You can see the dollar firming up a little bit here against the euro, against the Canadian dollar as well. This is an initial reaction. It may not be a lasting reaction, especially if there's nothing too revealing in the. Hang on a minute. All right, I've got confirming news. No change in the Fed in the bond purchase program. And I'm looking for the economic projections by the market's reaction thus far. And again, this could be a very premature reaction. The reaction thus far, we're seeing with some strength in the dollar, which suggests that the Fed has bumped up its economic projections for, say, 2014. I'm still waiting for Trade the News to fill in some numbers here, so I don't have all the data yet. For the scalper, I'm going to expand the Euro USD chart as an example, but of course, you know, if I didn't make it clear earlier, this is a very tough trade to take during this time of day, regardless of the news or not. It's a very illiquid market. Very, very few, relatively speaking, buyers and sellers or traders in the market, which makes for either very often some exaggerated moves. Sometimes we see in this case, dollars firming up. Dollar firmness obviously means down on the Euro USD. Sometimes you see the dollar rally dramatically and then do a complete U-turn and go just as far, if not farther, the other way. So be very careful with some whiplash here, very possible. But as I expand this chart to an hourly chart, you know, if this is a classic three-wave impulse pattern, we may be seeing a wave 2 right now. What I'm wondering is this 133.85 area, which I've just highlighted with the horizontal blue line on my hourly chart. We're back to 90 now. I'm wondering if this area, which has been support all day, now becomes resistance. Again, a riskier trade given the time of day, given the nature of the news here, which is, you know, markets can really whipsaw in response to the Fed decision like this, but that does for the wannabe news trader. This does present a possibility. And I've only sort of hourly chart to highlight. Let me freeze the chart for a moment to make this point. I'm on an hourly chart to show that, you know, here are the lows earlier today. You see a number of highs actually in days past around this 33.80 to 33.90 area. So I mean, if you're an aggressive, and I stress the word aggressive news scalper, you're hoping for, you know, something like that. And just by micro pip, the euro has made a new post-news low. Okay, CNBC's a blab out of a storm and not giving me anything. I am going to. Oh, by the way, any questions? Again, a risky trade to take, but at least a somewhat logical one. That blue line I drew earlier on the 1 hour chart was at 33.85. You now see a 1 minute chart, and you can now see the price action, the kind of price action I discussed as a possibility. I'm going to freeze the chart one more time and emphasize this as the euro's making new lows here. I'm looking at this stuff. This is all the post-news reaction. And again, this 33.85 area was support earlier today, was resistance. The zone was at times in days past. So what happened here was initial drop, pullback, retest, and so far the makings of an extension lower, again in the direction of dollar strength. Dollar strength, perhaps what we're getting because the Fed's improved its economic forecast. I can't validate that yet. I haven't checked it, but that would be the logic if the market's true to form here. I'm actually going to the Fed's website to open up the file. And I don't see the projections yet. John has an order at 133. John, you looking for a buying opportunity? Wow, I'm looking for the projections and I'm not seeing them yet on their website. So bear with me while I look around. maybe my news source will provide an update on that. Back to 33.65-ish. I do see that the Fed cut its 2013, that's this year, 2013 GDP and inflation outlooks. That at first glance would not necessarily be a dollar positive, but so far, firmer dollar is what we're getting, at least against the euro. I'm putting the euro chart back in place. And as I freeze these 15-minute charts for these four major pairs, you can see it's a broad, the consistent theme. Dollar strength against the euro, dollar strength against the Canadian dollar, otherwise known as the loonie, dollar strength against the British pound, that pair known as cable, even dollar strength against the yen. You can see that sort of rise, pullback, extension scenario, just the opposite of what the euro did here on the Japanese yen. I focus on the euro, but there's your so far three-wave impulse pattern on the dollar yen. Still a question mark as to how much, if any, of these moves extend. Let's put it this way: if you took that euro short around 33.85. That's not a trade I can envision you expecting to occur a loss on. You should be at break even right now if you happen to take that short at 33.85. If you get knocked out, so be it. Essentially, in my opinion, this becomes a euro short if you took that. It becomes a sort of zero or hero trade. Either going to notch a 75, 100 pip win or nothing. To me, that's not the kind of trade you're willing to expose yourself to a 25, 30 pip or more loss. Again, especially given the history of price action this time of day and the history of price action in response to a Fed decision. Maybe you got the right document. Yeah, I was. 60. Yeah, that's it. I didn't see. Maybe I was in the wrong place in the website. Let me dig that up. Thank you for posting that link, by the way. Bear with me while I open that. I could open it on this PC that I'm broadcasting from now. But I'll tell you what I'm going to do. I'm going to instead just look on a separate PC. So, by the way, nothing happening yet in terms of significant new price action. Yeah, the euro just made a new post FOMC decision low. But if you're still in that trade, you're right. And then now, if you're looking for something to do, this is probably not the good time to be looking to do something. Maybe you're like John and looking for a long, but if you're looking to bet against this recent move, which has been in the direction of dollar strength. Not crazy at all to wait for some form of confirmation, maybe even on a 1-minute chart. Look for a higher low or something like that. Thus far, the post-news low is around 33, almost 33.40. Maybe you look for a rise to say 33.70, a drop back down to about 33.50, 33.60. If you're thinking betting against this post-news move and going long on the Euro USD, maybe you're considering something like that. Again, a riskier trade in this scenario. Let's put it this way. One way to play this is to let the market do its thing, let the market sort this out, and let especially the Asian and maybe to some degree the London session traders in Thursday's session sort out what they're going to do with this. I would say at least you could let the Asian session traders make sense of what the Fed had to say or perhaps didn't have to say, and then the next significant move and likely more tradable move in terms of manageable volatility could come around the beginning of Thursday's London trading session. Still possible that the dollar extends its rally here. Euro at post-news lows, same for cable. Dollar CAD is showing a big green 15-minute candle still. Central tendency for the 2014 change in real GDP for the U.S., according to the Fed's latest projections, 3 to 3.5%. Actually, a slight improvement, not much. Let me show you this real quick. Well, what I'm showing you is the previous projections. So what we saw in the projections published in March, at the March meeting, the Fed expected the U.S. economy, of course, let's be clear, the Fed's not perfect at all in terms of their guesses or projections as to what the U.S. economy is going to do. And by the way, if you find anybody who claims they are, it's nonsense. It's figuring out what economy the size the U.S. is going to do in the coming months or years. It's a mug's game, real guessing game. But in their best estimate, looking at the different members of the Federal Open Market Committee and what they each came up with their own projection or guesstimate as to what the U.S. economy would do in 2014, so-called central tendency of all the estimates pooled together was 2.9 to 3.4%. That was in March. Again, this is the March figure, published in March for next year. I'm looking at the figures from the link that was posted a few minutes ago by one of the attendees. And again, thank you for posting that link. So the Fed's latest projections are now showing for 2014 3 to 3.5%. So this box that I've highlighted now is now 3 to 3.5. I mean, a very modest improvement. An improvement nevertheless, which is a dollar positive, if anything, but a very, very modest improvement. Actually, I stand corrected. I said 3.5. It's actually 3.6. Oh, I'm sorry. I'm reading the wrong thing. That was for 2015. So yeah, 3 to 3.5% is the central tendency for projected GDP for the U.S. for next year. I'm looking at some of the projections now for Fed funds rate. Yeah, John just got stopped out for a small profit in the world volume. Yeah, it's not unusual here. So we got some price action. I'm going to switch this Euro chart to 5-minute chart. You know, we got some reaction, but it's not sticking. Now, is this today? And I believe it is. Yeah, what the market could be waiting for now is Bernanke's press conference. Again, the Federal Reserve Chairman Ben Bernanke, top dog at the U.S. Central Bank, starting a little more than 15 minutes from now, is going to begin a press conference. I don't want to say it's identical to, but it's somewhat similar to what the European Central Bank or ECB has done for eons now, for many, many years. At every one of the ECB meetings, the ECB president, currently Mario Draghi, conducts a press conference surrounded by a couple members of the ECB. The Fed traditionally has not done that until, starting sometime last year. So this idea of a Fed press conference, a post policy decision press conference, is fairly new in the Fed's long history. But they don't do this every month. It's about once a quarter. And I believe that the press conferences by the Fed, following the Fed decisions, usually accompany not always, but usually accompany the Fed economic projections, which we also got. So I would not be surprised if we're going to get a significant move sometime over the next hour, or maybe even broadly speaking over the next day or so. Any significant move we get, if we get one over the next hour or the next day, likely to be triggered by what Bernanke has to say, or maybe more specifically what he does not say. Now again, since the projections weren't even though they were slightly tweaked, slightly improved, the economic outlook according to the Fed for the U.S. economy for next year is slightly improved. Not much of a change, so I suspect we're going to see from the market's going to be looking closely now, or listening closely, I guess I should say, at what Bernanke has to say, and look for any sort of clue about an exit strategy if the Fed does decide to taper back its bond purchases. At his last speech, as I mentioned earlier, at Bernanke's last speech in May, Bernanke offered no meaningful hits whatsoever. In fact, Bernanke is a traditional dove. Bernanke leaning more on the side of, based on his speech last month, leaning more towards the perspective of missions, staying with the course in terms of bond purchases and keeping QE going. And that shouldn't surprise you when you consider Bernanke's central banking tendencies. Now, I've got a file to show you on that. Hang on a minute. There you go. I've got the link to this file, or link to this image, shown at the bottom there. Let me see if I can provide you the actual link rather than have you have to type it. Yeah, I got that. Hang on. Bear with me while I enter this in the room. There you go. I'm not mistaken. That's the same link that you see at the bottom of this image. What this image shows is, they don't show all the pictures of all the key FOMC members, but this does show this year's voting members. See, there's something like 19 or 20 people associated with the Federal Open Market Committee. That's the group that decides the monetary policy on behalf of the U.S. Central Bank, the Federal Reserve. Some of those members get voting rights each and every year. That is, voting rights on deciding on things like whether to move the Fed funds rate, whether to change the bond buying program, more bond buying, less bond buying, whatever. Bernanke's one of those people that always, as the chairman of the Federal Reserve, always has voting rights. Other members, for example, the likes of like Bullard or Evans, whose names you see on this graphic, they don't get the right to vote every year. The certain number of voters, I believe it's about 5 of the voters, are rotated or changed every year. Well, what's relative about this graphic is this. Notice how many of the voters, and I'll explain what this means in a moment, notice how many of the voters are lumped onto the left-hand side of this graphic. So what's a scale mean? Well, you see the dove label there, you see a hawk label here. The doves of which current Vice Chairman Janet Yellen is a notorious dove. The doves believe in the approach of keep QE going, keep buying bonds, keep buying treasuries, mortgage-backed securities, keep the monetary stimulus going. They're the ones most concerned about, hey, if we back off the stimulus too much or too soon or too quickly, the economy could teeter, the economy could go back into recession. They want to keep the flow of bond buying going. On the other hand, folks like Bullard and even some of the FOMC members who are not voters this year, like Dallas Fed President Richard Fisher, they want to taper back bond buying. I'm not sure which one, but I think it's the Philadelphia Fed President. I believe he wants to stop bond buying completely and start raising rates. And I must say he's got a case for it, given how he's described it in previous speeches. But the point I want to make was this: we have the current voting members at the FOMC, the folks that have the rights, the voting rights to decide what policy moves to make or not make. Those folks are heavily tilted towards the dove side, which is keep the stimulus going, keep the bond buying going, and obviously keep rates low, the Fed funds rate around between 0 and 0.25%. So the one takeaway from this is that, there was a lot of doves, a lot of dovish kind of voters, but obviously the key guy to watch here in terms of what he says or doesn't say is Bernanke himself. Not only is he the chairman, but he's also kind of a central dove, if you will. Another one to watch closely in the future. We're not going to hear anything from her today, but I would pay attention in the weeks to come to what Janet Yellen has to say if she has any speeches coming up, because one way to look at it is this: if and when Yellen shows some degree of optimism about the U.S. economic data, or drops any sort of hint about scaling back or tapering bond buying, that could be perceived as a significant hint by the market that the Fed is about to taper their bond buying, and I don't know when Yellen speaks next, but a Yellen speech which features hints about scaling back or more optimism than it normally shows about the strength of the U.S. economy, that could be a catalyst at some point in the future for a significant dollar rally. So I would not ignore what Yellen has to say. Dudley's sort of key player as well, but probably not as important these days as is Yellen. And the reason I don't highlight someone like Bullard, we know the folks like Bullard, some of the extreme hawks, we know they want to raise rates. We know they want to taper back or even taper back on or even stop bond buying. But the people in this list or on this graphic that really matter, the people who the rest of the voters tend to follow, folks like Bernanke, folks like Yellen, and maybe even like Dudley. So I would pay particularly close attention in the weeks and months to come to what the likes of Yellen, Bernanke, maybe even Dudley have to say. Now, I wouldn't ignore I guess, now that I think about it, I would not ignore Evans as well. Charles Evans, the Chicago Fed president, considered to be sort of the main architect of this QE program. A key architect of the latest rendition of quantitative easing by the Fed. So, Evans would be one to watch too in terms of, whenever he thinks the U.S. economy is showing some significant improvement, when he starts showing optimism about where the U.S. economy is going. Evans is the one who, in months past, it might have been actually last year when he talked about this, Evans is the one who's provided the market with some more concrete guidelines. Evans has talked about, as I recall, one of his guidelines was like 200,000 plus jobs created per month, which you get from the NFP report, for like 6 consecutive months. So you can look at his prior speeches, and Evans himself has provided some guidelines which the market pays attention to. And here we are back at the charts, and the Euro USD again back near post-news lows, and Bernanke's press conference due to start in 7 minutes. If I'm not mistaken, either someone on an FX Street or maybe an attendee, if you know what the schedule is, correct me if I'm wrong. I believe my webinar ends in 7 minutes, so I will not be, and actually I'm going to have to leave anyway because I do have a meeting to attend at the top of this coming hour, so I wouldn't be able to stick around anyway. Just checking the schedule here. Oh my gosh, an hour and 15 minutes. Oops. Well, I can go on a longer. I thought this was going to be a 45-minute webinar, so I had planned something for 3 p.m. Eastern time. I didn't realize it was going to be an hour and a half, around 15 minutes. Oops. Yeah, I have longer. Thanks for the reminder, Ian. I have longer than I thought. So I'll tell you what I'll do. Unfortunately, I'm going to have to leave before the scheduled end of this webinar, and that's my fault. And I apologize for that, but I can send a text message to the two gentlemen that I was scheduled to meet, and so they'll understand my tardiness. So I'm going to draw a compromise here. I will leave earlier than the schedule on the website commits to, but I will be leaving later than I had committed to a couple of gentlemen I'm going to be meeting at 3 p.m. New York time. So I hope that compromise. Let's put it this way: when it comes to Bernanke's commentary, he delivers a speech, but it's going to be a fairly short statement. The keys will be in the question and answer portion, and if recent or if past press conference or an indication, he could be at this for an hour, folks. Bernanke could be speaking to reporters for maybe up to an hour. So I know my coverage wouldn't I wouldn't expect my coverage, even if I were to stick around for another 35 minutes. I could not cover the I would probably not cover the entirety of Bernanke's Q&A session unless reporters don't have many questions after, so I kind of doubt. But if I had to guess, if there's going to be something really market moving from Bernanke, it would likely come from his statement. I don't expect, if history is any guide, I don't expect Bernanke to deviate much in terms of his answers to questions from reporters. I don't expect him to deviate much from his prepared statements. So, I mean, if his statement hints at, stay the course, continue the QE, that sort of thing, then I suspect his answers are to some degree mimic the kinds of comments he made at his speech back in May, which I alluded to earlier. But yeah, his speech will be, or his press conference, which again, his prepared text will last maybe a few minutes. That will be closely watched. And although the euro is trying to eke out new lows here, you see this on the 15-minute chart. The euro dipped. It almost hit 33.20. Now back at 33.30. The dollar is still drifting higher against other major currencies, but it's a gradual thing. It's not a definitive move yet, and likely not because the market's still waiting for Bernanke's speech. And by the way, the bond market doing what you might expect it to be doing relative to what the currency market's doing. So again, let me for those of you who just logged in, especially, here's what we're seeing. Let me change this. I want to make this a 15-minute chart. So these are all 15-minute charts, 4 major USD pairs. And you can all see dollar strength against 4 major currencies here. Dollar strengthening against the euro, against the loonie, against the British pound, and against the Japanese yen. And as this has been happening, if you look at the U.S. 10-year Treasury note yield, it has risen from where it was before the Fed decision, which I think it was maybe 219, 220. 2.20, as I recall, was roughly where the U.S. 10-year yield was before the Fed decision. Now it's closer. It's not quite 2.30, 2.3%, but it's near there. So a rise in the dollar and a rise in Treasury yields kind of goes hand in hand, and both suggest the market thinks, right or wrong, that the Fed is at least a little closer to tapering its bond buying program. And now, of course, for validation, we're going to have to wait to see what Bernanke has to say. And it's a big question mark as whether or not Bernanke will provide any kind of validation. Bernanke may sound a little more neutral, even slightly dovish. And these moves we're seeing unfold right now could very well flip. So we'll see what happens. Yeah, John Savage mentions the countdown, and I'm watching that as well. I don't know if anyone took the euro short that we discussed, but congratulations to anyone who did. Even if you took it on a demo account, congratulations. Let me go back to 1 minute chart. We discussed this actually no. Let me go back to hourly chart. Can anyone confirm this? Again, this is not Curt thumping his chest or showing off or anything. I just want to make sure that the message was understood, that at least someone heard me say this. What we discussed, minutes, it was like within the first 5 minutes of this post-news move, we discussed the euro was hovering, when I last showed this hourly chart, the euro was hovering right around here. I drew this line at 1.3385 to represent the lows the euro saw earlier today here, plus maybe like a high there and some of the highs seen in past days. Now you could argue that the real line should have been closer to like 33.80, 33.75. I won't argue with you if you had a line at 33.75 or so instead of 33.85. I put the line at 33.85 based primarily on the lows established earlier today. But the trade we discussed, I hope I adequately emphasized the risk in taking that, given the history of sometimes very unusual, very volatile post-Fed decision moves. The trade we discussed was essentially a retest of those lows established earlier today. Maybe a 5-minute chart will show this a little easier. So I'm on a 5-minute chart. On this 5-minute chart, you can more easily see the lows established earlier today around 33.85. And this trade, which you unfortunately can't see on this 5-minute chart, you can see it on a 1-minute chart. Bernanke, by the way, getting ready to speak soon. This was simply a role reversal play. To draw it separately here, there's that was 33.85. And what happened was the euro broke below previous support following the announcement, retested the previous support, example of role reversal, and has extended lower. And as I speak, Bernanke is beginning his prepared statement. So even if you're not in the trade, pretend that you are, and you're looking to manage this. Now, again, as I mentioned earlier, a moment ago, Bernanke could say something to upset the apple cart and flip the dollar. So this is where you have a decision to make. The decision could be to let's go back to the 1-minute chart. The decision could be to just move your stock to break even, and fingers crossed. Hope Bernanke helps your cause and says something that prompts a further strength in the dollar. Maybe you're in somewhere around here, for example, or you've taken profit on this. You can close this euro short trade, and going to let the Bernanke say whatever he wants to say. I mean, that was a pretty respectable profit there. If you close the trade right as Bernanke began to speak here, or if you haven't closed yet, you could certainly justify closing it right now. Or another option, you scale here. Maybe since Bernanke's begun speaking, you close a portion, maybe half, maybe 3/4 of your position, and let the rest run and break even. Thank you, SA, for the and Ian for the reminder that Bernanke's speaking now. As I said earlier, if history is any guide, Bernanke speaks for maybe a few minutes here. This particular press conference presentation or speech, usually much shorter than the speeches he makes to like an economic club or like a committee of Congress. Let me put this chart back in place. Essentially, Bernanke's stating verbally what's already in the economic projections that the link to which we pointed to earlier here. Bernanke's about to address the Fed strategy for normalizing policy in the long run. That's a fancy term for normalizing policy, a fancy phrase, I should say, for undoing what the Fed has been doing in a big way for some 4+ years. That is, all these bond purchases, the Fed buying Treasury securities, the Fed buying mortgage-backed securities. At some point, the Feds, unless we really turn Japanese here, which some think we are, at some point, at least the Fed would like you to believe the Fed's going to begin undoing, what they've been doing, selling these Treasury securities or mortgage-backed securities back to the market. Although what he may be discussing now is maybe they're going to let some simply mature and roll off, which would be less unsettling to the market. I'm seeing a highlight from CNBC. Bernanke says, we will provide information on unwinding purchases at an appropriate time. So that's a very non-committal response, isn't it? Again, let me repeat. Bernanke apparently has said that the Fed will provide information on the unwinding of purchases at an appropriate time. Now, the markets, a lot of ink is going to be spilled as to what appropriate time might mean. I'm paraphrasing based on the highlights provided by CNBC. I haven't heard exactly what Bernanke has said, so I'm trusting that CNBC's reporting is spot on. Bernanke said a strong majority of the FOMC believes the Fed should not sell mortgage-backed security holdings during normalization. For those who don't know what the heck mortgage-backed securities is, essentially it's the Fed's way of supporting the U.S. housing market. An unusually large, historically large portion of the mortgages originated here in the U.S. these days have essentially find their way back to the Fed in some way, shape, or form. In other words, the U.S. Central Bank, a huge financial supporter right now of the housing market, and that's very unusual and actually not in the long run not healthy at all. I've heard my share of housing market bulls saying, "Hey, the housing market's back. It's all good. It's all fine." This is not your father's housing market, folks. Not your mother's housing market. Well, thank you, Trevor. Trevor's posted for those who don't have access to a cable TV network like CNBC, I suspect Bloomberg. You can probably go to Bloomberg TV and see this as well. But there's a Ustream link from Trevor. Thank you for that. Well, so far, it's merely a modest move so far, but so far, anyone who took the strategy of a short near 33.85, somewhere near there, as we discussed earlier, the role reversal play, and then close the trade when Bernanke began to speak. So far, that approach has worked well. Thank you. Bloomberg is live, huh? Good. Now, is that just simply BloombergTV.com? I'm going there now. And no, it's not. Where is that? By the way, Bernanke's still speaking. This is all review, folks. He's not saying anything new right now. Not saying anything new. Okay, Bloomberg.com/TV. Was that streamed from the Fed website, really? Let's see what Bloomberg's showing. I suspect they're showing, well, they should be showing Bernanke, but maybe they're not. Yeah, they're showing Bernanke. So if you go to Bloomberg.com/TV, you can also... By the way, you can not only see Bernanke's testimony there, but you can, if you don't have access to Bloomberg TV through a cable provider, virtually everything from Bloomberg TV is shown on that website. Through that link. So the question is, how long can we expect this news to be in effect for FX? By the way, the dollar extending its gains against multiple major currencies, well, at least against the euro and also against the British pound, starting to make a higher high here on the dollar yen as well, or trying to. So Bernanke certainly is not saying anything to discourage the dollar bulls. Now, if you took even if you didn't, pretend, for example, that you did take profit on the euro short. This is not the time to dwell on what could have been. I mean, it was. There's been plenty of occasions historically in the past where you get a move in one direction following an FOMC statement or the decision itself, and then Bernanke starts speaking, and the market decides to do something else. It happens. Now, for the trader who took the short earlier and then scaled, that was a pretty good strategy here. The question again, how long can we expect this to last? I mean, the most accurate answer I could probably give you is this could last through the majority of this entire press conference. I mean, I can give you no guarantees, and no one really ever can. Bernanke has been known in the past. He has been known in the past to say something which the market grabs onto and responds to, dollar strength, dollar weakness, whatever the case may be, don't know. Bernanke has been known in the past as saying something in response to a question from a reporter, or in the case of presentations to a committee of Congress in response to a question by a congressman or congresswoman. He has been known to do that in the past. But I would say, especially given the length of this presentation, which is even a little longer than I thought, I would guess my best guess would be, and again, don't bet money based on what my own best guess, but my guess is that he's, when he finishes this presentation here, that's probably going to be it. I mean, we could see some further volatility. The dollar, who knows, may extend its gains. But I suspect whatever Bernanke says here, what he's saying right now, is going to be it. I would guess in this scenario he's not likely to deliver a surprise. I cannot remember the last time, if at all, that he's delivered a surprise in response to questions at a press conference like this. He has been known in the past to deliver a modest surprise during a testimony to U.S. Congress. Having said that, let's face it, anything's possible. One thing that is disconcerting about Bernanke is that, being the Fed chairman, he will not only represent his own opinions, but he's been known to that's the term, straddle the fence a bit. I believe he's on speaking, by the way, and ready to field questions. Yeah, Bernanke's been on straddle the fence a bit, and CNBC reporter Steve Leeson asking the first question. Leeson will be bragging about that for a while. Ian, I honestly could not tell you. I do know this, Ian. Historically, an extension of any post-FOMC move, more common during the London session than during the Asian session. There have been times, and maybe Thursday's one of those times, I cannot guarantee. There have been times when Asian session traders have continued what started here. In my observation, in my analysis historically, the more likely scenario is an extension sometime during the next London session. I'm getting close to my wrap-up time. Again, for those who didn't hear me say it earlier, I mistakenly, and that's my fault, I apologize for this, I mistakenly scheduled a meeting for 3 p.m. New York time, which is 17 minutes from now. I've got a drive to get there. I know I'm going to be late, but that's not your fault. It's my fault. I do want to try to establish compromise here where I'm going to end 15 minutes before the scheduled time, but I'm also going to be late to my meeting, so it's just kind of, I guess, 6 of one, half a dozen of the other. But as I said earlier, I suspect that Bernanke's he said what he's going to say, and I would be surprised if he says something significantly different in terms of theme, in terms of whatever from what he said in the past. In other words, the dollar is still holding on to its gains against multiple major currencies since he's finished his prepared text. It wouldn't be unprecedented, but I would consider it unusual for Bernanke to do a full retreat and say, "Nope, sorry, I was kidding." Statement we published earlier, that my prepared statement. Sorry, I was kidding. We're really going to be QE forever. But some continued volatility here, perhaps. A brief retracement in the dollar would not be shocking. Remember, one key here to remember is that we do have, as the dollar ascends gains against the euro making new lows here, dollar yen making new highs, dollar yen around 96.80. Keep in mind this is a fairly illiquid market, and that is the time of day. The time of day is one where there are very few traders in the market. As such, what you can get is exaggerated moves in either direction. And this move we're seeing on the dollar against the euro, for example, the high was around 34.15. We're getting a new 15-minute candle now. Present price around 32.90. I mean, that's a move of more than 100 pips. During a London session, or particularly during the New York morning session, you probably wouldn't see a move quite this big. although this move certainly may not be done. And again, you might not see a move as big as this over this period of time during the New York morning session because you have more traders in the market, more of a battle between buyers and sellers. Again, moves in this time of day can be exaggerated, which is one reason, by the way, if you happen to be shorts on the euro, to kind of let it run, because moves at this time of day, if it decides on a direction, which it has thus far, it can continue. Now, continue until you hit a logical profit target. As for logical profit targets, you might look to charts with indicators such as pivot points for an idea on that. And I'm going to wrap this up pretty soon. See, we have hit a daily S2 pivot point and near 1.33, the psychological level. There's daily S2 and 133 about right there. Happens to be an hourly 200 EMA there as well. 4-hour 55, weekly central pivot point. A lot of stuff around here. A lot of sources of prospective support. And I probably missed a couple as well. Yeah, look at this daily chart for the euro, and I'll wrap it up with this. See the highs there established several days ago, some lows here. The 133 area had some effect on price action earlier this year. You see it in there and there. So while a further extension of the dollar's gains against the euro is possible, this is a logical zone for several reasons, as I just discussed here. This is a logical zone for several reasons for the euro to at least struggle. For the euro bears or dollar bulls, you might say, to struggle. Well, congratulations, John. Well, folks, again, I've got to wrap this up, and I really do apologize for the mistake is purely mine. Most of my webinars here have been for 45 minutes long. I thought today that was the case as well. It's not. That's my fault, but I hope I've provided sufficient coverage, and I'm glad that I've provided enough coverage to take us through Bernanke's prepared text. Now Bernanke's answering questions from the reporters at the Fed's press room there. And while an extension of the dollar's gains against the multiple major currencies, including the euro, is still certainly possible, I guess the main risk I wanted to emphasize here was a reversal. And so far, Bernanke said nothing to upset the dollar bull train. So far so good if you're still a dollar bull. And as we go from question to question, if you're watching this on the video stream, as we go from question to question, the deeper we go into it, in my experience, the less likely Bernanke is going to say something meaningful. Because to give the reporters some credit, probably the more important questions are usually, not always, but usually asked earlier on in the press conference. So we're on our third or fourth report or so right now, so it's less likely we're going to see a question, an important question asked that hasn't already been asked. And thank you to FX Street, and thanks especially to everyone who attended this event. Feel free to contact me if you've got any questions. Let me give you my email address. There's that. You can track my digital footprint, which I'm a little behind on tweets and stuff, but I will be giving that more attention over time here. You can go to that website there for my digital footprint, my digital trail, if you will. And as the dollar trying to extend its gains against the euro here, I bid you adieu. Thank you, folks. Oh, and by the way, I believe I'm scheduled to do another webinar for FX Street just before tomorrow's New York morning session. So I'll be back in a few hours. Cheers, folks. Again, thank you.